Well, hello and welcome to this Moneycontrol Live. You're watching a morning trade with me, Nandita Khemka. It's a Tuesday morning, and nevertheless, it is giving us a Friday feeling, given the fact that the markets are shut on account of Eid tomorrow. But, over the next 30 minutes, we'll be talking about the sectors to watch out for, where do we expect the markets to head from here, and of course, all the stocks in news, including Lupin, AB Capital, and the likes. And of course, we'll also be getting all your stock-related queries answered by our experts on the show. So if you have any queries, send them in to us on our YouTube feed and we will have them addressed by our technical expert on the show. But before we do all that, as usual, let's take a look at the top stories at this hour. Tech sell-off leads Wall Street lower. Nasdaq slides led by heavyweights like Tesla, Nvidia, Alphabet and Meta. Asian markets open lower as well. SGX Nifty suggests a muted start for the Indian market. Among stocks in focus today, Aditya Birla Capital launches QIP with the floor price set at about 176 rupees per share. Reports suggest it is looking to raise as much as 1750 crore rupees. Meanwhile, Lupin may be looking to demerge its API business to unlock value. And lots of activity on IPO Street. IdeaForge IPO gets fully subscribed on day one and Cyient DLM's 590 crore rupee IPO kicks off for subscription today. Well, let me bring on board our first guest for today. Joining us is a big market poised Rahul Arora, CEO of Nirmal Bang, joining in this morning. Well, good morning, Rahul. So good to have you on the show. Let me first get in your thoughts on the current market rally, given the fact that we have been consolidating after the Sensex hit a record high. Do you expect, this bit of, consolidation to continue going forward? Do you think the bulls are getting fatigued at these levels? Where should we expect the markets to head from here?
Morning, Nandita. Thank you for having me on the show. So I think this last leg of the rally that you saw, I think from, the policy before last by the Reserve Bank of India, when the Nifty was somewhere around 16,900, you've had almost a 2,000 point rally since then. I think that came on the back, Nandita, of the fact that people felt that global central banks were done hiking rates. I think that was the general prognosis. If you saw the yields in India as well as the US and some parts of Europe, they'd actually started to come off quite materially. And that was reflected, I think. But progressively, I think the commentary has started to get a little more hawkish. And I think it's got hawkish, close to all-time highs for our Nifty. And that's going to make it a little difficult to push out. We've been in a range of about 16,700 to about 18,700 for about 2 years now. Obviously, there'll be a breakout at some stage. Optically, it looks like there'll probably be a breakout on the way up. But I think over the next couple of months, if we get a sense that, the rate hikes are genuinely done, I think, then the chances of a breakout on the way up and heading towards 20,000 on the Nifty, the chances increase quite materially. I think the biggest positive, of course, is that the global recession that was being spoken about, right since October, November of last year, that hasn't happened yet. Yes, there has been a slowdown in most economies, but there's nothing been to the tune of recession. And results, by and large, whether you look at the United States or India, they've been okay. They've not been terrible. They've not been, spectacular. But I think all things in balance.
Right.
I'm not too surprised to see where we are, but I think the commentary will need to be a little more dovish for us to break out of this range and head, maybe 10% higher from.
Right. Rahul, you spoke about earnings. Of course, IT has been one pocket that has come under pressure after the kind of earnings we saw in the fourth quarter. And the first half of the current fiscal is also expected to be, weak, given the kind of guidance we saw from Accenture and, the global company called EPAM. As money, is rotating out of IT, do you think pharma is one pocket that could emerge as a dark horse in the second half of this year?
So it's an interesting observation. And I think, as you rightly pointed out, like I was saying, that the talk of the US recession started in the last quarter of the last calendar year, and that's not happened. So I think that fear will linger at the back of people's minds, and people will tend to be underweight on IT. Pharma is an interesting one because if you remember, in the first 18 or 20 months of the pandemic, this was the sector that had pretty much led the Nifty on the way up from that 7,500 move that we had seen. It's been consolidating in price and earnings, I think, but FY24 might be a turnaround year. I think US pharma may still be a bit patchy. I think, there's still probably competitive intensity that's reasonably high there. I think pricing pressures still exist. And barring, say, maybe a Sun and to some extent Dr. Reddy's, I don't think too many Indian pharma companies have got that skill set on the specialty side to, tap the US markets and other global markets in a material way. So our tilt will be more towards domestic pharma companies where we think return ratios are strong. Cash flow generation is going to be good. Market leadership is strong. So we'd probably look at recommending names like Torrent Pharma, where you have return ratios in the mid-20s, a very strong margin profile, and a very strong expansion in return on equity and capital employed, I think by almost 300-400 basis points. Cipla could be an interesting one. Again, largely a domestic play, a leader in inhalers as well in the European region. And I think if you look down the market cap chain, I think you could look at names like Ajanta Pharma and JB Chemicals. Again, very strong return ratio profiles and margins, and looking predominantly at domestics. If you get a correction in Mankind, I think that's a report we released, just after the IPO. The stock's sort of been hitting new 52-week highs every now and then. But I think if you get a correction down to about 1,500 on Mankind, that could be an interesting one. So your point is well made and well taken. I think there could be some amount of monies that go in from IT to pharma and maybe FMCG to some extent as well.
Right, some interesting names, Rahul, you spoke about in the pharma pack, of course, Mankind being the, the interesting one here. But since you spoke about FMCG, would you, side with something like an ITC right now, or, would you say that HUL looks more interesting given the fact that we are, witnessing a leadership change there as well, which of course takes place today? What are your thoughts on both these stocks, HUL and ITC?
So obviously, Nandita, ITC has been a dream stock if you've held it for the last 12 to 15 months. I think it's been a doubler and a little bit more than that. So I think it may pause for some breath, is my sense. Obviously, the dividend payouts are really good, and I think they've managed to demonstrate that the non-tobacco FMCG business margins are sort of, edging up into the high single digits, low double digits. There is some visibility on that. But obviously, in the backdrop of the run that it's seen, I think it may pause a little bit for breath. I think we probably need to look at places where, the revival in rural economy will marry a time or a price correction. And in that, I think Lever does fit into that. I think on any corrections, you could even look at names like Britannia and Nestle. I think these are very high quality companies with very high return ratios and pedigrees, good dividend payouts in some of these, entities. And I think the urban side of the business has been doing well, right? I think premiumization is holding well. I think Lever at its last analyst day spoke about 1/3 of its business is now coming from premium sales, and their, entire pickup that they're seeing through their Shikhar app on the rural part of the economy is also doing well. So I think Lever at about 2,500, not a bad entry point. A little bit of a correction on Britannia and Nestle. And I think if you probably move down the market cap chain there, Nandita, I think something like a Dabur or a Marico could also be interesting from a price point. And maybe if you get into consumer discretionary a little bit, I think Titan also looks interesting. I think the wedding season, the last one has been strong, and by the early challenge checks that we've done, it looks like it's going to be a good year this year as well. So I think some of these names could do well. So wherever you've seen urban consumption do well and likely to sustain, I think there's no reason to sell into those stocks. But I think where you're likely to see a rural recovery, because most of these companies that I've spoken about, Nandita, will have about a 40 to 50, maybe even 60% exposure to rural. So, I do understand that the monsoons have been delayed, but I think if July, August, September are good, and then of course you are in a pre-election year. So if you start getting some sort of handouts from the government of India as the year progresses, it could bode well for the rural economy, and you could see a revival in some of these names.
Right, that's the view on the FMCG pack. Rahul, really, I just have time for one last question. I would love to have this, have a longish conversation with you, but I want to get in your thoughts on Bajaj Finance. I remember after the fourth quarter earnings, CLSA had come out with an interesting report titled Kohli's Aggression and Dravid's Defense. And I bring this analogy here, given the fact that I know you're an ardent cricket fan, and so am I. So, do you think, given the fact that, Bajaj Finance has managed to reverse last year's underperformance vis-a-vis the Nifty, do you think the worst of the underperformance is over for Bajaj Finance, given the fact that we also have Jio Financial Services that will be disrupting the sector? Do you think the balance sheet is strong enough to withstand the competition going forward? Do you think the balance sheet has the Dravid's defense that CLSA was, really talking about?
So I think when you look at stocks like, say, a Bajaj Finance or a DMart and some others in the market, a lot of these stocks enjoy a certain valuation, and they at any point in time seem price of perfection, or even at a significant premium to that price to perfection. And that pretty much means that your margin for error on delivery is practically zero. And I think you've seen that in the case of DMart and Bajaj Finance. You eventually saw it happen in names like Asian Paints and Pidilite as well, where people thought these stocks would just not correct. I think while your point is well made on Jio Financial Services, I think we probably need to see how that entity evolves. Yes, a large part of the underperformance has probably come on account of the fact that there is going to be competitive intensity that's increasing. But I think if you still look at the consumer durable sector and a lot of the other verticals that Bajaj operates in, we see no reason why this entity for the foreseeable future cannot compound at 25%. With that, as the base becomes bigger, there was a time when HDFC Bank used to compound at 20%, and that's why it used to get the valuations. But I think people need to adjust the fact that as the base gets bigger, these growth rates might moderate. But I think even on such high bases, if they're able to give you a 20-25% kind of growth, which we are relatively sanguine about, because they're market leaders, the penetration in what they do is so high that it would require some Herculean effort for a competitor to come in and dislodge it. That's not to say that Jio Financial Services won't. They might well do it, and it might be good for the sector overall, and especially for the consumer. But I think that if you are holding onto the stock, right now, I see no reason to sell it. I think the all-time high of the stock is somewhere around 8,000, and it's probably $1,000 away from there, so about 10-15% away from there. But I think, Nandita, the way we look at it is probably stay market weight BFSI. And within that, look at companies that are either going to outperform their segment market growth or have very good asset quality or collection efficiencies, whichever part of the BFSI sector you look at. And I think on many parameters, on current evidence, especially when you look at the competitive intensity, Bajaj Finance scores on most parameters for us. So if I was, having it in my portfolio, I'd have no reason to sell it just now. In fact, if I get any corrections towards 6,000 or maybe even lower, I'd probably look at adding some more. So we'll deal with Jio Financial Services when it lists later this year. But I think there's enough of a window of 3-4 months where you could probably play the stock. And maybe even beyond that, let's see how the situation evolves.
Well, that's the view then on Bajaj Finance. With that, Rahul, thanks a lot for taking out time and joining in this morning. It was an interesting conversation that I had with you this morning.
Thank you for having me.
Well, with that, let's quickly shift focus to our technical expert. Sacchitanand Uttekar of Tradebulls Securities is waiting by very patiently. Before we get on to that exclusive from my colleague Ashwin, Sacchitanand, very quickly, what are the levels you'll be watching out for on the Nifty? Do you think 18,700 will emerge as a strong support for the index, at least for the rest of this week?
Good morning, Nandita, and thank you for having me on the show. Clearly, this particular level would be important because even last Tuesday we saw this particular level getting breached, but there was a very strong buying recovery which led the index again close above that 18,840 kind of a zone. So even right now, if you look at the data from last Tuesday, this particular range is very much evident. We have substantial support at around 18,660 on the lower side. And on the higher side, the immediate range that we are tracking is around 18,840. So probably, Nifty could continue its oscillation within this particular range itself. If you look at yesterday's trading session, despite of being a very muted session, we saw a inside bar formation, a kind of a doji formation, and probably the level of around 18,740 would be critical from a momentum perspective for the day. So overall structure still remains bullish because the Nifty is holding well above its 5-weekly exponential moving average. Now this is the 13th week wherein this particular moving average has been defended on the support side, and unless we don't see a closing below 18,610 on a weekly closing basis, the entire trend structure still remains positive. So probably in the last few trading sessions we have seen some more consolidation here, but this entire consolidation looks healthy for the major uptrend. So we are expecting momentum again getting back into the action once the Nifty starts trending about 18,740 on the higher side. The expectation is that probably on Thursday we may see Nifty closing this particular series about 18,800 itself.
Right, so that's those are the levels to watch out for. Sacchitanand, hold on. I'll come back to you and talk about specific stocks. But joining me now is my colleague Ashwin Mohan, who has this exclusive news break on Lupin. In fact, Lupin is looking, is exploring a demerger of its API business. Ashwin, who's the deals editor at Moneycontrol, has broken this story last night. Good morning, Ashwin. Good to have you on the show. Well, fill us in about this exclusive story that you broke. Lupin going the Glenmark way.
That's right, Nandita. Good morning. You hit the nail on the head. Good to be on the show. So what we're given to understand from our sources is that pharma major Lupin is weighing an internal restructuring exercise. Remember, the company was in the news last week following the US FDA approval for its key respiratory drug. Now we're given to understand from sources that it's in internal rejig mode. And as part of this proposed internal restructuring exercise, we are given to understand from our sources that Lupin is looking to carve out or demerge its API, which is the active pharmaceutical ingredients vertical, which is in revival mode. Now, we are given to understand from our sources that this demerger option is being pursued actively and deliberations are at an advanced stage. And the rationale for this seems to be to unlock value. Now, it remains to be seen if a potential listing or a stake sale of the separated entity is explored at a later stage. That's something that we'll have to keep a watch out for. But this is the strategy that they have in mind. Glenmark had done the same thing earlier as well for its API vertical, Glenmark Life Sciences, which later got listed. And now, of course, it's in the midst of a sale process, which Moneycontrol has reported on. We did reach out to Lupin. In response to our email query, a Lupin spokesperson said that at Lupin, they continuously evaluate strategic options to create value for stakeholders. However, they declined to comment on market speculation. The statement said, we remain committed to our strategy of focusing on our core business areas while exploring opportunities for growth and expansion. So that's the statement coming in from Lupin. The stock has risen by more than 24% in the last 3 months. Let's wait and watch to see how this proposed transaction proceeds in the coming days. Nandita, back to you.
Right. Well, that's all the exclusive details on Lupin coming in from Ashwin. Ashwin, thanks a lot for taking out time and joining in this morning. Sacchitanand, coming to you, Lupin on the charts, as my colleague was mentioning, it has gained somewhere around 20% in the last 3 months. In fact, in the last 1 month also, it has gained 9% or thereabouts. Very close to 52-week highs of 885 levels or thereabouts. How would you trade a Lupin now?
Well, Nida, I think after October 2021, this is the first time, the stock is trending very confidently above its 200 weekly exponential moving average, which is placed at around 830. So until unless we don't see the stock, slipping below the same, the entire recovery process, we understand that, there could be much more headroom which is left on the upside. So even right now, I think what we are expecting is that eventually we may see this particular stock scaling towards 955 comfortably. And that's why every decline would be an opportunity, to go long. There is no change in trend or any of the, trend strength indicators here. So probably, this particular news flow could be on the positive side. And existing long positions can be maintained with a stop loss somewhere close to 830 on a weekly closing basis.
All right. Use any dips to buy into the counter. We have a query coming in on this very stock on our live feed. I hope this answers your query. Let's talk about the stock of the day, then Bharti Airtel. There are some leadership changes that have been announced when it comes to Airtel business. CEO has resigned, Ajay Chitkara, and Morgan Stanley, of course, has come out with a report saying that, it has an overweight rating on the stock, the target price of 870 or thereabouts. And it notes that Chitkara's resignation will be significant. But, it also notes that the leadership team is already in place to ensure business continuity. Do you think this bit of news could, come as a setback for the stock price in today's session? Or do you think it's pretty much factored in given the fact that, the business continuity will be maintained? That's what Morgan Stanley is saying.
Nandita, I think the stock is locked in a very strong bullish trend, and it has been elevating its pace every now and then. Even day before yesterday, we saw a very strong firm breakout once the cluster of around 840, 825 was breached confidently. And post that, yesterday we saw an inside buyer formation. So we may see some consolidation here. And the structure itself is saying that, every time it consolidates, it gains more confidence for an elevation. So even right now, I think the structure is intact for an up move towards 900, 905 from a long-term perspective. From a short-term perspective, we may see it oscillating within this particular band of around 865 on the higher side and 840 on the lower side. So probably this could be a much more wider range when it comes to consolidation. But overall structure, even for this particular counter, looks very confident. The elevated base is now placed at around 825. And unless we don't see a weekly or a monthly closing below the same, the entire setup remains positive. So I would, retain my momentum longs. 865 would be the immediate target. But on the lower side, even if we get 840, 842 kind of a zone, I think even that particular zone would be a healthy level to get or to add fresh long positions.
Right, that's the view on Airtel. Chart structure looking positive from here. Let's take up a query on Zentek that has come in on our live feed. Now, this stock was up 8 to 8.5% in yesterday's session. And I think, it is very close to its 52-week highs as well. How should one play this counter now? Sell on rallies or, maybe buy on dips?
I think this was because of the news flow yesterday. But if you look at the structure is not really weak. We've already seen some corrective from its life high levels of around 453. But even right now, it has managed to sustain above its 5-week exponential moving average. Even last week, we saw a swing support somewhere placed around 325, and this particular low has been maintained really well. So I think unless we don't see a closing below 320, the entire structure still remains positive. The immediate level to track on the lower side could be somewhere close to around 380. So in case if we get levels close to 380, there could be another opportunity to get into the counter. But on the higher side, it is already trending near its all-time high levels. The entire pattern which is getting shaped up, it looks like a bullish flag. It's a continuation pattern again. And once we have a confirmatory breakout above 440, probably we may see an extended move towards 520.
Right, that's the view on Zentech. Expect levels of 520 on the charts going forward. Let's also take up a query on FACT. The fertilizer pack was extremely active last week. In fact, Mohit Anand Bhartiya wants to know if this is a good time to buy the stock at the current market price. And, if he's saying that if this is not the stock one should buy, if there's any other stock from the fertilizer pack that looks attractive. Now, over the last 5 days, FACT has gained somewhere around 11% or thereabouts. Once again, it is moving towards its 52-week highs, at this juncture. So how would you, or what would you advise him to do? Should he go with the FACT, buy it at current levels, or should he look at some other fertilizer stock?
If you look at, FACT, clearly the structure is very strong. We've recently seen it breaking from a cup handle formation. The pattern itself is giving us a target of close to around 520. And that's why I think, one should remain, committed towards this particular counter itself. The pattern will only fail in case the stock starts slipping or trending below 370 levels from here on. So I think the idea is, to hold on to this particular counter. Any declines towards 390, 395, I think would be another good opportunity to get into this particular counter. 370 should be the stop loss which should be maintained on a weekly closing basis. And the overall expected target could be somewhere close to around 510.
Right, buy on declines is the call for FACT. I hope that answers your query. Let's also take up a query on Mazgaon Dock. Nanda Bapni had written in, wants to know your thoughts on this one. Mazgaon Dock as a stock has really run up quite a bit. Do you think, this stock is up for some bit of profit booking going forward, or what are the levels you'll be watching out for on this counter?
It's an overheated counter, but even right now, if you look at the daily or the weekly, relative strength indicators, there are no signs of any divergence in strength. And probably, that's why we have already seen, every time this particular stock, shows some signs of profit booking, it ends up into a consolidation mode. And again, the momentum picks in. So even right now, I think it's a very similar case. So I think from a momentum perspective, 1130 would be an important level to watch out unless this particular stock is trending above it. Probably, we may see this overall trend momentum getting continued. On the higher side, we still have a scope for this particular rally to extend till 1485. So one can, keep a positive bias, maintain a stop loss at around 1130 on the lower side, and expect a price target somewhere close to around 1480, 1500.
Right, Sacchitanand, two stocks I want to get in your thoughts on. Aditya Birla Capital, it has launched its QIP issue. In fact, floor price has been set at 176 rupees per share, and it's looking to raise somewhere around 1750 crore rupees or thereabouts via the QIP. And the second stock I want to get your thoughts on is Sapphire Foods, given the fact that, reports are suggesting that there will be a block deal in the counter today, and it will be at somewhere around 1345 to 1391 rupees a share. Your thoughts on these two counters?
For Sapphire Foods, I think the last 4 weeks, the stock has been showing a contracting trend. So in case the stock starts trending above 1450, 1480 kind of a level, then probably we may see a very strong rally towards 1700 eventually. The floor is very well maintained at around 1335. So that should be the stop loss for the trade. And when it comes to Aditya Birla Capital, it has been, very strong up move, bull trend. And the immediate resistance that is evident on the price scale is somewhere close to around 200. So before that, we don't see any major hurdles in this particular counter. Even the recovery in the last two trading sessions has been very swift. So it looks like a clear-cut V pattern recovery, which is complementing with the resistance level target of around 200. So probably some trading longs can also be initiated here with a stop loss at around 170.
All right, let's get in the last query for the day then. This one is coming in from Mayur Mehta on Deepak Nitrite. He wants to know if it's a good time to accumulate some of these chemical stocks. You know, chemical stocks haven't really been doing all that well, over the last few months, and earnings weren't also up to the mark. So would you advise investors to look at some of these stocks now for the long term?
Definitely, Nandita. I think if you look at the price formation, we have already seen a very strong rally till 2021, and post that it has been almost 18 months of consolidation. So I think this is a very good time wherein these particular stocks should be considered in one's portfolio. From a trading perspective, plus from a portfolio perspective, I think this particular stock fits well. Overall, the expectation would be that the recovery that we have seen so far, could lead this particular counter towards 2700, 2750. And on the lower side, I think the kind of rounding bottom base that we have seen so far, I think that particular base, is providing us that confidence. So 2000 is the level wherein one can keep their stop losses here, and keeping a probable time frame of around a year or so. And we may see this particular stock again trending towards 2700, 2780.
All right, that's the view on the entire specialty chemicals basket. But I think with that, we've come to the end of this edition of Morning Trade. But before I let you go, Sacchitanand, some of your stock picks I would like to go through, because there seems to be a problem with the feed there. So Sacchitanand is recommending Coforge, buying in fact Coforge with a stop loss of 4,550 and a target price of 4,740 or thereabouts. And when it comes to the other pick, he has recommended buying into a Hero MotoCorp with a stop loss at 2,780 and a target price at 2,860. Of course, his calls are mainly in the futures and options segment. Well, with that, we're completely timed out on this edition of Morning Trade. But don't go anywhere, because coming up next is Opening Bell. Thanks a lot for watching.